Shares of Gap, that ticker symbol GPS, it's moving higher by about 9% pre-market after beating earnings expectations on the top and bottom line. Sales growth, that was up 2% across all of their brands, and inventory up 12%. That continues to be the headline for retailers, but for Gap, largely better than expectations here on many fronts. Yeah, no?
Sure. They beat on earnings by, 69 cents, and that's probably why the stock is up. They also beat slightly on sales. Banana Republic, good quarter for that brand. Comeback. Banana Republic, believe it or not, has been probably the comeback retailer of this year. And it pains me. It kills me to even give Gap any credit. But at the end of the day, here's a company still battling very high levels of inventory, battling margin degradation. Oh, yeah, it still doesn't have a permanent CEO. And it sounds like from that earnings call last night, they really don't have anybody in the mix, at least right now, for a permanent CEO, which is alarming as you start to plan out 2023 budgets and buy that inventory for the spring selling season. I have a story right now on the Yahoo Finance homepage just breaking down some other concerns in here. Chief among them, this is a company that is prepared to get very, very aggressive on promotions and discounting this holiday season. So we could be sitting here about 3.5 months from now talking about a retailer with a very bad quarter.
We could be, potentially. As I wrote about in this morning's morning brief, inventory management is where it's at, and Gap does seem to have done a little bit better with inventory management at the cost.
At the cost of margins.
Right, at the cost of margins. They're doing a lot of promotioning, as you said, like a lot of these brands are, and it did see an improvement in the year-over-year inventory build, like we saw at many of those retailers that we just showed, with the exception of somebody like Kohl's, for example, which is still seeing a big inventory build year-over-year. But retailers, by and large, seem to have gotten the message. They have to clear stuff out. Are they going to take that short-term hit? It depends on which retailer you're talking about and how they have managed things thus far. But Gap at least has managed to get the message here. And the whole idea that people are going out and going to work and buying Banana Republic things is so interesting.
They've improved the quality. They've done a better job. Mostly for years, Banana Republic was essentially Gap clothes, just more expensive. Same thread, same you name it. But they have improved the quality, a lot of new leaders there, so I have to tip my hat to them.
This is also a larger question of what's taking place with Old Navy right now, and is that starting to wane in favor, at least in the era of fast fashion? Now, Old Navy still brings in about $2.1 billion for Gap, at least in this most recent quarter, and you kind of compare that to the $4.04 billion, so they're still largely putting the team on their back for the lion's share of the revenue, but it's now for Old Navy as a subsidiary within Gap. How do they start to retain some of the fanfare that they had seen over many years, and then also combat what an H&M is doing, what a Zara is doing, what all of these
Shein.
other fast Shein,
Ross stores.
Yes, the
Ross
e-commerce
stores.
plays, and Ross stores, which we can talk about too.
Yeah, really good quarter for Ross stores as well. TJ Maxx early in the week, somewhat a good quarter, but I think for Gap stock to work higher, you have to have that Old Navy division humming.
Yeah.
That business is 60% of Gap's overall sales, and now sales are starting to just decline there in addition to margins. They're still dealing with major inventory problems there, and as long as that's playing out, I just don't see how this rally is sustained.